Dear students, today what I am going to teach is final accounts of non-trading concern, video number 6. Well, here what I am going to tell you is treatment of certain items. Let us take the items one by one and let us see how they are being treated in the final accounts of non-trading concerns. First one, capital fund. What is capital fund? Look at the balance sheet. You got two sides. One is liability side on the left hand side and assets on the right hand side. If you calculate or if you ascertain the difference between the assets and liabilities of a non-trading concern, what you get is capital fund. It is shown on the liability side of the balance sheet of a non-trading concern. The capitalized receipts of the current year, such as life membership fees, because it is received once in a way, once in the lifetime of a member. Legacies, that is the donation or gift received as per the will of the deceased person who is no more. Then entrance fees, amount collected at the time of entry of the member. Donations. So these are certain capital receipts and these are added up. And then this year's surplus, that is excess of income or expenditure, which you find in the income and expenditure account, are added to the opening fund to get the closing fund. Opening capital fund. So opening capital fund is in the case of existing non-trading concerns. In the case of new non-trading concerns which have been started this year, there is no opening capital fund. So here opening capital fund is the difference between assets and liabilities at the beginning of the year. So it is calculated by preparing the opening balance sheet of non-trading concern. So while preparing the closing balance sheet, if you do not find the opening capital fund, you need to prepare opening balance sheet and thereby you are going to calculate the opening capital fund. And in the closing balance sheet, it is a starting point of capital fund. To that, all capitalized receipts are added. And if there is surplus, that's also added. If there is deficit, then it is deducted. Come to subscriptions. So subscription is a regular feature every year. Subscriptions are received from the members. I told you in the case of non-trading concerns, there are no shareholders. Rather, you have members. So subscriptions are received regularly from the members. And they should be treated as revenue receipts and entered on the credit side of income and expenditure account. Now, how they are calculated? Let us see in the income and expenditure account. How it is credited to income and expenditure account. Yes. So subscription received during the year. And during the year, there might be some outstanding subscription. So here you have to take the item on accrual basis. For 12 months, whatever is to be received, that is to be taken. Either received or to be received, that should be taken. Whatever has been earned, that should be taken. So if there are certain outstanding subscriptions during the current year, they have to be added. And if subscription of current year were received during last year, then since it is relating to current year, that should be added. And then you have to deduct one or two items like current year subscription includes subscription received during the year and they were outstanding during the previous year. Yes, sorry. Last year's subscriptions were outstanding during last year, but they have been received during the current year and they are included in the subscription received. Since they are relating to previous year and not relating to current year, we have to deduct the subscriptions of last year from the current year subscription. And then subscription of next year, that is subscription received in advance during the year. You have received this year, but that is related to next year. Therefore, that should be deducted. So thus, after all these adjustments, whatever you get, that is the subscription of the current year and that is credited to income and expenditure account. later on when you prepare the closing balance sheet and you try to find out capital fund, there to the opening capital fund you are adding capitalized receipts, and then you are adding this value, that is this is to be credited to income and expenditure account. So I'm subject to correction. These are shown on the credit side of the balance sheet, and then credit side of the income and expenditure account, and the surplus of income and expenditure account, that will be added to the capital fund on the liability side of the closing balance sheet. Okay, and now let us move on to the membership fees. Like membership fees are issued in one lump sum at a time, so they are to be treated as capital receipts and added to capital fund on the liability side of the balance sheet. Legacies, already I told you, they are the gifts or donations received under a will on the death of the donor. Donor may write the will and register it before his death, and as per that, donation or gift might be received by a non-trading concern, and that's of non-recurring nature. Therefore, they are treated as capital receipts and added to capital fund on the liability side of the balance sheet. Entrance fees. Entrance fees are received from the members on their admission. They may be treated as capital receipt or they may be treated as revenue receipt. So there is a controversy whether that should be taken as capital receipt or revenue receipt. That depends upon the treatment. It is up to you whether to treat it as capital receipt or revenue receipt in the absence of specific instructions. Some say that though it is received only once from the members during the year, you may receive the entrance fees from many members. Therefore, it is treated as revenue receipt. On the other hand, since it is received only once in the lifetime of the members at the time of entry into the non-trading concern, that should be treated as capital receipt. Whatever it is, you have to write a note in the examination in the absence of instructions as to the treatment of entrance fees. If you treat it as capital receipt, okay, that will be added to capital fund. If you treat it as revenue receipt, that will be entered on the credit side of the income and expenditure account. Okay, next one is donations. So there are two types of donations. One is special donations, the other one is general donations. Special donations are for specific purposes, such as donations for building, a donation for pavilion. So only for construction of the building or pavilion such donations are used. Special donations should be entered on the liability side of the balance sheet as the special fund and not added to capital fund. Since separate funds are created and they are shown on the liability side as separate special funds, so to that it should be added. Now let us look at general donations. General donations could be of two types. One is of big amounts, the other one is of small amounts. Big amounts are treated as capital receipts and added to the capital fund on the liability side of the balance sheet. General donations of small amounts are treated as revenue receipts and entered on the credit side of income and expenditure account. Credit side of income and expenditure account. Okay, now we will move on to government grants. So normally government grants can be treated as recurring grants, and so as revenue receipts they are entered on the credit side of the income and expenditure account. So normally government grants, if they are received regularly, they are treated as revenue receipts and credited to the income and expenditure account. But if the government grants are for specific purpose, such as government grants for building construction, they should be added to the special fund on the liability side of the balance sheet. That is, you might have opened building fund on the liability side. To that you have to add, and thereby you have to use it only for the construction of building. Ordinary recurring grants received from the government should be treated as revenue and should be credited to income and expenditure account of a non-trading concern. Let us move on to the next item, special fund. Already I told you, Special fund is for specific purpose. For example, prize fund. What is the purpose of that? To give away the prizes to the students, for example. Then tournament for construction of conducting tournaments. So tournament fund is created for the purpose of conducting tournaments. It could be kabaddi tournaments or volleyball tournament or any tournament. So to encourage sports. Then charity fund. The purpose is for giving charity, not to make profit, but to run charity or for charitable purposes. Charity fund is being used. Building fund for construction of buildings. All the incomes and expenses connected to the special fund should be entered on the income and expenditure account. Should not be entered on the income and expenditure account. Since that is the revenue generated from special fund, that should be added to special fund only. That should not be entered in the income and expenditure account. All the incomes connected to special fund should be added to the special fund, and all the expenses connected to the special fund should be deducted from the special fund on the liabilities side of the balance sheet. And one more thing, if the amount to the credit of special fund is less than the amount of expenses in that special fund, then what should be done? For example, credit to the building fund is 1 lakh, whereas amount spent on the construction of the building is 1,30,000. What to do now? There is a shortage of 30,000, so that should be debited to income and expenditure account. So if the amount of special fund is less than the amount of expenses connected with that special fund, the balance expenses not covered by that special fund should be entered on the debit side of the income and expenditure account. Then sale of old sports materials like old bats, old balls, nets, etc. These are regular receipts. So that is to be treated as revenue receipt, entered on the credit side of income and expenditure account. Sale of old sports equipment. Sale of old sports equipments like billiard tables, table tennis tables, etc. are capital receipts. Look here, old sports materials are treated as revenue receipts, whereas sports equipments like tables, like billiard tables, table tennis or table tennis tables, etc. So they are to be, yes, taken as capital receipts and added to capital fund. Next, endowment fund. Endowment fund, it is created for the purpose of giving, for specific purpose rather, created by a gift given by a donor. It provides a permanent means of support to a non-trading concern. Hence, it is of capital nature. It's recorded on the debit side of receipts and payments account and shown on the liabilities side of the balance sheet. Since it is not treated as income, it should not be taken to income and expenditure account. Okay, endowment fund. For example, in colleges you may receive the endowment prizes, endowment fund for the purpose of giving endowment prizes. Alright, sometimes the donor may insist that the amount given at the beginning, that should be kept permanent, and income generated therefrom, maybe by keeping that in fixed deposit in a bank or something like that. So whatever income is generated from the original fund, so that should be used for a particular purpose or for general purpose in order to help the non-trading concern in improving the general financial condition. So if it is to be used for specific purpose, then it should be treated as capital receipt. It should be added to endowment fund on the liability side of the balance sheet. On the other hand, if it is of general nature and there is no restriction regarding the use, then it can be used for any general purpose, and it can be treated as revenue receipt and entered on the credit side of income and expenditure account. See the difference between special fund and endowment fund. Special fund does not remain the same every year, whereas endowment fund, original amount, that will remain same, and only the income generated therefrom is used either for specific purpose or for general purpose. If it is used for special purpose, then it should be added to that fund only, endowment fund only. If it is used for general purpose, then it should be credited to income and expenditure account. So if there is no specific instruction in the examination regarding the purpose for which it is going to be used, then it can be treated as capital receipt and added to the endowment fund. Now let us see the treatment of certain items. For example, calculation of stationery used and provisions used or medicines used. How they are going to be shown. Let us take one example of stationery used. So stock of stationery at the beginning. If there are not that many items, then the treatment is stationery at the beginning of the year, add purchase of stationery during the year, less closing stock of stationery during the year. Then you get stationery used during the year. But if there are some other items, for example, amount paid for stationery during the current year. So you are paying for stationery purchase during the year. Amount paid for stationery during the year means you are going to purchase the stationery during the year. Advance payment made for stationery at the end of previous year carried forward. So last year advance payment is made, but that is for current year. That is why it is added. Now let us deduct the items here. Creditors for stationery at the end of the previous. So last year there was outstanding item, outstanding value for stationery purchased. Now you are paying. So this year whatever you are paying for stationery, of that some amount relates to last year. In other words, outstanding stationery at the end of the previous year, that should be deducted. Similarly, advance payment for stationery at the end of the current year. For example, for next year you are paying the advance this year only, and that is not the expense of current year, therefore that is going to be deducted. Then stock of stationery at the end of the current year. I already told you stationery at the beginning of the year, purchases during the year, and stock of stationery at the end of the year. Then you will get stationery consumed. So thus, if you adjust all these items, so one or two items are added and one or two, three items are deducted, you get the stationery used during the year, and therefore that should be entered on the debit side of income and expenditure account. And if you find, for example, stock of stationery at the end of the year, that should be shown in the asset side of the balance sheet. Stationery in stock, I mean. Similarly, stock of stationery at the beginning, that will come to the opening balance sheet. Okay, now we'll move on to next item, actual amount of an expense, let's say salaries. Here also you have to add certain items, deduct certain items. So salaries paid in the year, that may consist of some amount relating to last year. Last year's salaries were outstanding, due at the end, but you are not paid, and during the year, from out of whatever you are paying here, that is in the first, this one, a part of that relates to last year, therefore it should be deducted because that is not the current year expense. Similarly, salaries of next year you are paying in advance, and that is not related to current year, so you have to deduct it because that is not relating to current financial year. Then current year's salaries paid in advance in the previous year. So actually it is last year which has been paid in advance, but that is relating to current year. Since it is relating to current year, so you have to take it because we are preparing the non-trading concern income and expenditure account on accrual basis. All the expenses of the current year you have to take. Last year's expenses and incomes you shouldn't take. Next year's incomes and expenses you should not take. So since this is current year salaries, though paid in advance last year, that should be added. Current year's outstanding salaries. This year salaries are outstanding, you have to yet to pay that, and therefore that is current year expense, so that should be added. So thus it is taken here. So if you make adjustments, these adjustments, whatever you get at the end, that is nothing but amount of salaries to be entered on the debit side of income and expenditure account. So thus these are the items you are treating in the preparation of income and expenditure account, and the excess of income or expenditure account should be added to capital fund on the liability side of the balance sheet. If there is shortage or deficit, or if the expenditure is more than income, then that should be deducted from capital fund. Yes, more about this you are going to learn when we solve the problems. Okay, thank you.